From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Talking the residential real estate market, specifically in Southern California, with our expert on the market, Phil Immel, the real estate guru, Team Immel Real Estate. And we've talked before we went on, he said this is a normal market, almost a boring market, and that's a good thing. What are you talking about?
Yeah, this year in residential sales, it is boring. What I mean by that is the market's kind of balanced. Originally, we went through the whole debacle, became a buyer's market, all the REOs and short sales. Today,
more than 50% were distressed
at the
sales
peak
in
of
2009.
in Orange County, correct.
Right.
So then it's now switched to REOs are like 3%, short sales are about 3%, almost non-existent. So it's back to traditional, normal market conditions, supply and demand fairly imbalanced, days on market imbalance. And so it's chugging along just nice and steady. And for those old timers in the industry, they might remember that's called a normal market.
So here in Orange County, for instance, and we can talk about LA, San Diego, that's about 3,000 sales, and that includes new and condo, mostly it's resale, a month.
Right.
And that's not great. It's Goldilocks, right, in real estate?
Right.
And enough to what? Keep prices moving up, which we need to talk about in a little bit because affordability is becoming more difficult. Will that be enough, say, this year, 2014, 2015, to keep prices moving up, say, in Orange County, or maybe start to flatten? We've had a pretty good run-up, as you know.
Well, we did. In 2012, we stabilized the market after the REO debacles and all that. And then 2013, we had hyperinflation, maybe 20, 30%, depending on where. And this year, I don't know what numbers you're promoting yet, but I'm going to guess it's 5 to 10%. So it's kind of
most recent. I look at the most recent. I think these were October. Sales were a little off by about 5%, but the median price, whether it's LA, San Diego, Orange County, up between 5 and 10%.
Right. It's gradual up, and the number of sales transaction count is down slightly. So it's kind of an equilibrium, and it's good. It's actually, if you recall, some years ago in the market, I was saying, as the guru, don't buy a house right now because if you put 20% down, it'll evaporate. Today, I'm here to tell you that the market's stabilized. There's more room for it to go up, but it's gradual. And if you haven't bought a home as a consumer, first-time buyer, you should.
Not that the all-time high, which was 2000, I think 7 maybe.
7
for real
was
estate.
probably the peak, right?
In Southern California, 505,000. Orange County, the number 640 sticks in my mind, is a cap. But in Orange County, for instance, we're getting pretty close to that, right?
Right. I think the highest median, according to California Association of Realtor price we had was in about April 2007. About 775 median price.
Today, maybe just on the resale side.
Excuse me, on the resale, correct. And then so today, that same number is about 700,000. So we're about within 10% of the peak market in terms of value of properties.
Of course, what's helping affordability, the second component, would be mortgage rates, which are again near an all-time low. And I suppose it's almost an anomaly when someone gets an adjustable rate mortgage these days. It's at 4%. Why not go for if it's a conforming loan? And jumbos aren't much higher either, are they?
No, everything's running kind of that 4-ish number. A little flirt below it, most of it a little bit in the 4.1, 4.2 range, even for jumbos. The problem is the criteria to get the loan is still a lot more stringent, clearly, than it was before 2005, 6, 7.
Well, tell me about those criteria. I mean, you made a note that still a good amount of people, and this isn't unusual, or for needing help from the parents to make the down payment. So we're looking at 20%.
Well, no, you could still buy property, even FHA, and some other products like 3, 5, or 10% down. 20% down, the better. But we've even had clients with 20% down, 790 FICO scores, great income and assets, get turned down by a major bank and flipped them to another mortgage broker, and they were able to close the transaction. But the big banks are still a little paranoid on underwriting.
It's not necessarily a bad thing unless it gets so overheated for a market to have investors and all cash buyers and folks who are not going to live in the home. It's a second home, a third home. And what is that market like? Well,
it was, the market during the recession, the Great Recession, was really dominated by the investors picking up all the bank-owned inventory. That's dissipated as the inventory's dissipated. So it's become more of a normal market. Now what's happening, there's always different segments, but now it's the empty nester segment. Kids going off to college, and the parents have the big house, and they want to get down to a coastal property. We're seeing that kind of dynamic happen at a very accelerated rate just because of the baby boomer kids.
Within Orange County, within Southern California, I should say, and within Orange County, are you seeing some stronger markets, some weaker markets, other trends?
Well, I would say overall it's healthy and kind of growing naturally the right way. And again, a lot of the corrections made in the financial industry are healthy for everybody long term. But the luxury market has really taken off. If you kind of correlate what the stock market's done since 2008 when AIG went under all the way till now, a lot of the wealth and the people buying coastal luxury homes in particular are funded by their stock options that they have and things like that. So that market has been very dynamic.
Almost 100 sales, a wild figure, I think. Almost 100 sales in Orange County alone, 5 million and above.
Right, and that's just kind of, if you took Newport Beach down through San Clemente, Laguna, Dana Point, et cetera, that's not the entire luxury market, but that's the predominant, Newport Coast, et cetera. So 5 million and up, almost 100 homes, year-to-date close compared to, say, Pete, in 2009, I think it was 38.
Well, no wonder the state treasury is getting healthy.
It is. A lot of new property taxes.
Yeah, property taxes and capital gains taxes.
And a lot of
unless they rolled into a $10 million home.
We hope.
You have a note here, and I want to take it up. We'll use this as a tease when we get back to break. You talk about the 6-month and 1-day rule, using the money to buy a free home. I want you to explain that
Okay.
when we get back from break with the real estate guru, Phil Immel.